Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Wednesday, the 5th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, I was watching the Trump speech yesterday, and I was watching it mainly for hints of what his trade policy was going to be for the rest of the year, and I wasn't actually listening to anything encouraging. He seems to be, he's talking about raising trillions from tariffs. He basically announced the start of a trade war against the EU on the 2nd of April. And he seems very, very keen on this course of action. Now, historically, it may be it's going to be different this time. It can always be different this time. But historically, this kind of thing tends to result in inflation, lowered growth, higher interest rates, and so on. And that obviously isn't really good news for anybody. And it's not good news for markets. So I had been reading that there was a chance that the Canadian tariffs could be sorted out in a day or two. The speech wasn't particularly encouraging on that front, not encouraging at all. So I'm leaning against that. But the reality is we do have a lot of positive divergence, and we will see how that goes. One thing I wanted to look at today, very, very briefly at the start, was because I just wanted to talk to anyone who's got Tesla stock. And because I have a particular point to make about that. Now, obviously, Elon and Tesla are very, very tied up. And obviously, around the world, Elon's not making any friends at the moment. It's so I've got a point to make about that, and that is that we've got this huge head and shoulders here. And it's really, really, really nice. And it's got a target at 150. Now, that's a very ambitious target to the downside. But at the moment, I understand that Tesla sales in Europe are tanking. People are taking the Tesla signs off their cars. They're putting on signs saying, I bought this before Elon went mad. And the fact that Elon is the front of Tesla is suggesting that actually this might make target. The two largest markets, of course, for Tesla are the US and in China. In the US, I suspect most Democrats won't be buying a Tesla next time. And in China, well, being Trump's next right-hand man probably isn't going to do him any favors in China either. I think this could well make it. I'm not doing a post about this on Twitter because I don't particularly want to get banned. But just saying, this has got a target at 150, and looking at the current circumstances, I think it might well make it. So even if that is a huge decline, really from the highs at 488, or even from the current level in the what was that? Close yesterday, 272 area. I think it may well make this 150 target. So if you do have Tesla stock, just bear that in mind. All right, great. Let's have a look at the short-term charts. Now, ES looks like we're probably heading back into a retest of yesterday's lows. I'm not seeing any particular reason to think that this won't go to yesterday's lows and go lower. Obviously, we're in a news bob environment here. If we see an announcement that the Canada tariffs or Mexico tariffs have been lifted, or obviously we could see a huge rally here, and we do have some positive divergence, particularly on the daily chart, suggesting that we could deliver a strong rally. But in the absence of that news, we're clearly in a downtrend, and there's no particular reason to think that's going to stop. And looking at the speech yesterday, this trade war appears to just be getting started, and is likely to expand a lot. NQ, little potential bottoming pattern here, but nothing really particularly suggesting this is going to rally. Next obvious stop would be a retest of yesterday's lows. On RTY, we've got significantly more downside. We made some targets. I've got more to say about this on the RTH charts. We made some targets on the downside yesterday, but obviously, as I was pointing out on all of these, we've got targets a long way below, potentially, on all of them. We got, if we retest this low, we've got a possible 60-minute buy signal brewing on YM, but really, I'm looking for yesterday's lows and probably lower. I'm not seeing anything particularly to cheer the markets here. On DAX, we actually... Hang on 1 second. Yeah, we actually broke down last night. No, sorry, we have a possible double top here, and we're going back up into retesting the high. But I am wondering about a possible breakdown on ESTX. We actually had a little breakdown. It seems to be rejecting back up to the high at the moment. This flag made target beautifully, but this may well be a topping pattern, and if the trade war is coming to Europe as well, and certainly with the NATO stuff in the background, there's no particular reason for these to be cheerful either. So we shall see. All right, great. And actually, DAX. One of the things remarkable about this run with DAX this year is actually Germany's been in recession for 2 years. A remarkable performance while Germany has been in recession, I've got to say. But we'll see how that goes. All right, great. Let's have a look at the bigger picture charts. Okay, one thing to talk about is the weeklies. On the monthly chart, we've the monthly middle band is down at 5281. We are not in any imminent danger of threatening that. But on the weekly, obviously, we just about held the weekly middle band last week, but we've lost it with a lot of confidence so far this week. We are at the weekly lower band. This is maybe an area to see some consolidation, and we've got a weekly RSI 14 sell signal fix that is on the way to target. It's now below the 50 level. But of course, you can't read too much into that until you reach the end of the week, because that's when the candle fixes. If we look at NDX again has reached the weekly lower band. This is the first time we quite reach it in the middle of last year. This is the first time we've actually reached the daily lower band since the low in 2023. Again, this is a significant technical break, and we are very much currently in a downtrend, and we've obviously got a double top that has broken down. Looking at Dow has not reached the daily lower band at the moment, but we've seen a conviction break this week so far, below the weekly middle band as well, and chances are that's going to fix at the end of the week. Looking at IWM. IWM, hang on, wait a second, that's the monthly. IWM, actually, interesting, is testing the monthly middle band at the moment, but then it has been the weakest. And we are considerably below the weekly lower band at the moment. This has been in a downtrend for a while. This could still possibly be a bull flag forming, but at the moment, it looks as though we're going to be in trade disruption for a few months at least. So we will see. All right, let's have a look again at the daily setups. Now on ES here, we've got a possible RSI 5 buy signal brewing, and we've actually got those brewing on SPX. ES and SPX. We've got them brewing on the keys. We've got them brewing on IWM. Or actually, I think we might already have a minor one fixed on IWM. But we've got a lot of possible buy signals here. So that's the case on ES. That's the case on SPX. That's the case on the Qs. Dia already has a full RSI 5 buy signal fixed. We could lose that if we go lower, and we've broken this rising support now. So this is all fairly bearish. And if we look at the patterns, I posted these yesterday, but obviously we're now trying to break down from this double top on SPX, which has got a target in the 53.60 to 54.40 area. And again, I'm not seeing a lot of reason. Well, I mean, if the trade war is not going to be good for confidence. And one thing I was noting yesterday from Trump's speech was he was talking about business confidence being way up. That is not the case. Or at least it might be on that particular statistic. But generally speaking, consumer and business confidence has been dropping in the US since the start of the year. The Atlanta Fed is now projecting recession for next year. I'm thinking trade war may well trigger that recession. We'll have to see, but very well may be. Looking at the Qs, I'm watching the rising support, which I've got in the 473 area, and obviously we've got open targets in about the 458 to 460 area. And at the moment, no reason to think that's not going to make target. Dia, now this is a slightly different story. We've now broken below this rising support, but this is the only one where we've got a big topping pattern that hasn't broken down yet. It is a beautiful double top. Historically, I haven't actually noticed the perfection of a double top actually having much impact on whether it makes target, but obviously this may well break down. I've got that support in the 417 area, and we'll see how that goes. A conviction break below would be looking for 385. We will see. Not a lot to say on the hourly charts, really. If we look at SPX, the hourly buy signal hasn't failed yet and might yet still deliver a strong rally. from somewhere. On Qs, again, still got an RSI 14 buy signal on. We've still got one again, albeit a weak one on Dow. All right, let's have a look at IWM for that as well. IWM, on the hourly chart, we've still got an RSI 14 buy signal fixed. On the daily chart, we've got a possible RSI 5 buy signal brewing. Oh, we did have a weak RSI 14 buy signal fixed, but that has actually failed now. Obviously, we could go, if we go down, we could lose all of these positive divergence on the daily daily RSI 5, but for the moment, we still have them. Looking at the 15-minute, not a lot to say. But pattern setups, I was having a good look. Those aren't particularly helpful. We'll see. All right, looking at DAX, we've got an RSI 14 sell signal which is fixed, and an RSI 5 sell signal that is fixed, and a potential double top here. We reached the trendline resistance and went very slightly over it. I'm liking the downside here, and we're testing the daily middle band of support, and that may well break. Nikkei. This has been doing some damage to the downside. And we're testing the 3SD lower band. We could see a bounce from here, and we do have a bit of positive divergence here. It's not a nicely formed possible daily RSI 5 buy signal like the others, but there is potential. And I have to say, we've been testing the 3SD lower band the last couple of days, and that tends to be a place to look for support. This is not a happy performance from the Nikkei chart. All right, let's have a look at the DX chart. Okay, DX is going down. We've killed off the possible double top setup, and we've had a very couple of opportunities to set up positive divergence here, and we haven't taken them. No particular sign of a bounce at the moment. Looking at the euro, again, we've been seeing this higher highs with higher RSI thing. There's no real divergence at the moment, and again, this may well just be heading higher. So we shall see. So I'm not really looking for a reversal here at the moment. We've also got a series of encouraging patterns, possible double bottom here on USD JPY, but we may be extending lower. USD CAD, we've got a possible head and shoulders forming, and I think that might well play out. Australian dollars breaking up for a double bottom. NZ is breaking up arguably for a double bottom, but it's not a particularly nice double bottom. But nonetheless, we will see. It's looking at ZB. ZB slightly overthrew my trend line here, and this could be a bear flag on ZB. Watching this to see whether we've got reversal. One of the things that has been encouraging, that a lot of people have taken encouragement from, is the long rally in ZB from January. But the thing is that going to last? Looking at the TNX chart, I would suspect not. And if tariffs are going to be a big player over the next few months, again, I would expect not. I think this is going to put upward pressure on inflation. It's going to kill off any chance of interest rate reductions from the Fed this year, and it may well lead to further rises. We'll see. But I think it may be that we're going to break up from this setup here, but I'm not seeing anything particularly to suggest that we might. And tariffs are bullish for interest rates and bearish for bonds. So CL, we're trying to make a little double bottom here at the moment, but I think at the moment with OPEC opening the taps and everything else that's going on, and the possible recession that may be starting soon across a number of the Western economies, I think I'm really liking the retest of the low at 63.57, and I think there's a pretty good chance we're going to make it. NG went back up and retested the high. Now, short term, this is blamed on the temperatures getting a bit colder, but bigger picture, of course, we've got a double bottom that's broken up with a target in the 6 area. I think we may well be heading there, and I think it may well make that target. On GC, if the dollar is tanking, then that actually isn't bad news for metals. So GC, I'm thinking, may well go back up into the retest this high. SI, I'm thinking, may well go up and retest the high, and I've got higher targets there, which I was talking about on the bigger picture webinar. HG, I think this might be heading back up into the high as well. So we will see how that goes, but a falling dollar is bullish for metals. KC is returning to the high, I think, and we will see where it goes from there. But we've been seeing there is some, well, historically, KC is now very, very high, and there has been better news on crops. This may well be making a top and coming down. SB, we've got 60-minute buy signal fixed, and a bit of a rally going on so far. Might have an inverted head and shoulders forming. CC has been heading lower and may well head considerably lower. This no longer looks like an overall bull flag. On wheat, we've seen a sharp decline, and I'm thinking we might see a bit of a rally here and then go down further. On corn, the same. And tariffs not great for corn and soybeans. One of the things that Canada put immediate tariffs on yesterday was soybeans. Short term, though, we've got a little IHS breaking up here, and that's got a target in the 475 area. We'll see whether it makes target. Soy, we're seeing a little bit of a rally here. Again, we've got a 60-minute buy signal fix. Not seen an awful lot from it so far. It did make its double top target to the downside. So there's, but I am wondering on the bigger picture about more downside. On CT, I had hopes this would be a double bottom. Nothing to see on that so far. Tiny bit of positive divergence here, but and we're seeing a little bit of a rally. Lumber, got to say overall, I think I'm leaning down. Except for the fact that tariffs are going up on Canada, that seems to be putting up some things that it applies to. So it may affect lumber in that direction as well, or it may have already done so. Live cattle, we've got a 60-minute buy signal fixed, little double bottom that's broken up. I think I'm leaning towards seeing a test of the week pivot, and we've got quite a lot of resistance there, so that'll be an important level for whether this is going to go up again. And on lean hogs, we've got 60-minute buy signal fixed, but not much sign of a rally so far. All right, let's have a look at questions, of which we have none. All right, so there we are. At the moment, looking at the speech yesterday, it does appear as though a full-scale trade war may well be starting, and that is bearish for equities. We've got a lot of topping patterns. A number of them are broken down at the moment. I'm leaning towards them making target. We shall see. Are we going to have a recovery later in the year? I think that rather depends on what happens from here, but I'm leaning towards it until we see significant evidence to the contrary. In the short term, I've been talking all year about a weak first half of the year. That is delivering so far. The question is whether it's going to recover later in the year. But I think at the moment we've come down quite a way, and there's every reason to expect us to go lower. We shall see. All right, my pleasure as always, mate. And everyone take care. I'll catch you tomorrow.